It's hard to talk about investments these days without hearing the word bubble.
We have an asset bubble.
So I don't think we've got a broad bubble.
Historically, it's indicative of a bubble type environment.
You look at Bitcoin, it doesn't have any income. So it's a pure speculative, self-fulfilling bubble.
But for all the talk, how can we tell what's a bubble and what's not? And what happens if it is a bubble and it bursts? Morgan Stanley's Ruchir Sharma decided to go back in history, analyzing the 10 biggest bubbles over the last century, everything from the U.S. stock market in 1929 to Chinese shares in 2015. And what they had in common was a price that rose 100% in the year before they peaked, with much of the gain packed into frenzied trading in the last few months, as day traders and other latecomers came rushing in. So, if history is a guide, where do we see those traits today? Ruchir Sharma says SPACs certainly make the cut.
I think that SPACs are very much here to stay.
Clearly, there's a lot of hype.
As do cryptocurrencies.
I think Bitcoin will be somewhere between 40 and 55,000 for the next chapter before it kind of builds up enough new momentum to take out that 55,000 and end the year much higher.
But some people insist that, far from a bubble, crypto is actually a hedge.
If you're looking for a safe haven, I see Bitcoin as the most secure, most reliable, most certain thing in the entire economic universe.
If things like SPACs and crypto do prove to be real bubbles, things could get ugly. As Ruchir Sharma's work shows, historically, when bubbles burst, they take roughly 70% of the asset's value with them. But Sharma admits that it just may be different this time, given how much liquidity there is in the market and a commitment from central banks to easy money, the likes of which we've never seen before.
Now really the focus is on, can we make sure that the liquidity that's gone into the system, the support that's been provided, translates into long-term sustainable growth?